So we're gonna move on to the cheap versus expensive debate. Again, for most new traders, even, I've done this myself starting out, is you think that if you have more shares of a name, that you're gonna make more money. You think if you have 1,000 shares of a cheaper stock and it goes up 100%, you're gonna make more than if you had one share of, an expensive stock. I'm trying to think of any Amazon price point name, but they've split so many that there's none that are really that ridiculously expensive anymore. But generally, the more expensive the stock, the safer it's going to be from a risk standpoint, where you can find much tighter entries in these higher price stocks than the cheaper ones. And our general rule of thumb is we try to avoid any name that's generally under $30 a share. If it's above $30 a share, go nuts. But if it's under 30, if it's in the 20s, sometimes it's okay. But when you get into the teens, the $10 into the penny stocks and below, it's not going to be for us. You'll end up risking 10-15% off the bat, and you very rarely going to get the risk reward where it's going to really make sense in the long run with those cheaper names. So anything above 30, it's good for, it's a good start. And when you get even to the pricier ones, you'll often find much tighter risk reward trades. And I'll see if I can pull up an example really quick. Let me go. So again, I'm trying to go through my watches, and the cheapest name on here is $20. So I'm going to circle back next time we do this, and I'll have an example of like a penny stock. I don't have any on these watch lists that. Let's see. Yeah, no, the cheapest is going to be $20.
Wasn't SI a cheap one that you had been looking at not too long ago?
Oh god, this is dead.
There you go.
So this is a good one. Okay, here we go. So this was, if you were to, for example, buy this stock through, we're gonna say just $2. There's really no setup down here, but we'll just say you bought it at 2. And you just, forgot to put a sell stop in, went away for a couple days, you come back, and it's currently trading at $1.40. Trading 60 cents lower. Doesn't sound like the biggest deal, but that's a 30% drop. Now, on the flip side, for the name that I'm in at the moment, this RXDX, I bought 112, and my stop is verse 106. So if I put the same amount of money in that name, that $2 name, I lost 30%. I put $1,000 in, it's worth $700 a few days later. If this trade is going to fail tomorrow, and I buy it at 112, and it goes to 106, which is what my stop is, I'll lose 5%. So this is one of those reasons, and this is like, fails tomorrow, I'm out. Where that, Heaven, what was the ticker again?
SI.
SI. With this name, a couple of days, you forget about it, and 30% of your money's gone. And this is, somewhat of an example of why we try to avoid these cheaper names. You don't really get any of the upside, and you get far more of the real risk in the trade than anything that's really worth your time. All right, so